Hello, this is Craig Larson with Larson Financial Advisors for our Market Minute video update, October 30th, 2013. Well, since the market shrugged off the whole debt ceiling debate and we haven't really had any shifts in the last couple, 2-3 weeks, I needed to find something interesting to talk about. So one thing that was very interesting recently that happened was anticipation of the Twitter IPO, or initial public offering. Twitter, as many of you know, is a social media giant. They're going to do an initial public offering of stock in November with the proposed ticker symbol on the exchanges of TWTR. Okay, and there's another company that is called Twitter, which is a bankrupt electronics chain out of Boston, with the ticker symbol TWTRQ. Okay, only one letter different. And when a news announcement was made about the Twitter IPO, the Twitter stock went up 1,000% in a very short time. Do you think somebody maybe hit the wrong button and didn't look what they were check into what they were doing? Yes, and when they realized what happened, of course, the Twitter stock plunged back down to where it had been. And you'd think that maybe people would learn to double or triple check the ticker symbol, but it happened again not long after that with TW Telecom, symbol TW. And that stock went from $30 to $300 a share in a few seconds. And the NASDAQ exchange actually canceled the trades because they figured it was a mistake. So be careful out there with your ticker symbols. Make sure you double check, triple check those things before placing a trade. And then secondly, we have data that we get from a research company that looks worldwide at demographics and economic conditions. And they are very convinced there is a real estate bubble developing in China. So one of the things that you can do to besides seeing the ramp up of real estate prices, 20-30% per year, which we know is unsustainable, you can also look at how much multiple of income it takes to buy a property to see, is that reasonable? Is it sustainable? And right now in China real estate in Shenzhen, which is the biggest coastal city, a condominium costs 35 times annual income on average. In Beijing, it's 30 times. And Guangzhou is 28 times. And if you compare that to other parts of the world that are even expensive, London is 15 times the average income, and New York City's 9. So they may have something to watch for here. A Chinese real estate bubble, if that's the case, if it bursts, could be a game changer for world markets, as what we saw back in 2007, 8, and 9 with our own real estate bubble here. Another interesting note, my uncle travels to China 3 times a year and knows a lot of people there. And one thing that he hears about when he talks to people there is that they all want to invest their money in real estate because it, quote unquote, never goes down. We've heard that story before. We knew how it ended here. So it's something interesting to keep an eye on, and I'll keep you posted about that and any other changes in the markets. In the meantime, have a great week. Thanks for tuning in.